Good afternoon, Scott Redler, T3 Live. Welcome to today's recap, the first recap in September, starting the fall. So someone was asking me before, actually, I was in the hallway, like, so Red Dog, what do you think? Who won today, the Bulls or the Bears? And to be honest, I do think today could have been stronger, and that the Bears kind of won a little bit today, but I think that the intermediate trader sort of won today. And let me explain why. Because on Friday, if you were saying, okay, you know what, market's a little weak, Russell had a pony down day, financials, no strength, the Dow down 4%, I think I need to go out short. Okay, there was one case for that. If you were, a stock picker and you trade our go-to list and you're like, you know what, Netflix is acting well, LinkedIn's acting well, Tesla's acting well, Apple's decent, Facebook's in the game, some of these bios look good. I'm going to take a few stocks because that's what I've been doing, or I've been in these stocks for a month. Let me stay with them, and then just put a little hedge on and manage around them. Or you went out flat, and then if you think about Sunday night, guys that were short were definitely worried. Oh my goodness, what am I going to have to do? Am I going to have to cover this, or am I going to have to play the roll-up game? Guys who are flat said, oh, my performance has been great, but now I'm going to miss 15 handles up. Can I buy the up open and for a close up 30 handles? And then just you're at a spot where you're like, what's going to happen here? So you look at the tape, you look at the spiders real quickly. So with that being said, this was what today was. All we did is hold above 165.05, that little weekly high, push through, fill a portion of the gap, and did not have enough oomph to stay above it and close sort of strong. If you look at it now, you can't be all in short the same way I don't think you could still be all in long. I think this is a time when, prudent traders sit on their hands. This was a little bit more clear cut. This head and shoulders top. You remember that? That was pretty clear cut when we then broke below this 169.85 and we talked about taking risk off. And then here, that closing the lows when things were weak, time to put on some puts, time to get short, and then you had it. Now, we're kind of hovering here. And to me, I can't really make one of those 2 to 3 week calls because I'm not exactly sure. So when I'm not sure, I'm not going to come out and act like I'm sure. Okay, I'm not going to come out and say, I think this because of this. Right now, I think there's some confusion. I think we're 5% off the highs. It's been a normal correction, a correction that we've seen, 2 times or so in 2013. The same type of correction we saw in 2012, besides one a little bit bigger. And the question is it going to be more? And we don't know. If anyone's going to tell you that was it to the downside, I think they're guessing. And if anyone says, you know what, within a month we're going to be new 2013 highs, it's also a little bit of a guess. So for me, you can be tactical. And if you look at the spiders one more time, I came in flat and I tried to figure out, can I buy these things? Will it be a gap and go? How do we go about it? And you look at the 5-minute chart in the spiders. Okay, this is opening up above the prior resistance. So into this pullback, I said I'm going to buy some spiders. If you looked at the virtual trading floor, you probably saw me get a little long, stayed long it, and then once we broke below the 30-minute pivot, which was 164.97, I said, you know what? We're not pent up. We do not have a big gap here. We do not have to chase these things in the overall indice. I am out. So I wound up losing a little bit of money, and that was fine. Some people who had short in the brain, which wasn't me, saw the weakness, and you could have made for yourself a decent tactical short before bouncing off the lows to keep some guys questioning. But overall, here's your gap up. It didn't hold. Here's your daily chart, hovering on bigger, longer term, intermediate support. And I would say if I had to do an option trade and go 2 weeks out, I probably would be buying puts versus calls right here. Just if I had to, but I don't have to, so I'm not going to. And I don't have enough evidence to do it. So I think there's enough, action intraday to trade. And there are some things that closed decent, that closed pretty close to their highs if you come back to me. And there were things that closed well off their highs that if you bought a dip, they turned into a bigger dip, and you're probably like, oh my goodness, what do I do now? One of those, just say, let's go quickly with Apple. Apple, this was the lower range. Here was a nice move. This is when it broke this 503, one spot to get out of the way. And now we've been trying to figure out if this, bigger range, is going to work its way through. Well, here it busted above 496.50. Then they sent out the invite, which people knew of anyway. I don't even know why they sent it out or what the big deal of that was. And then it closed near the lows. So if you bought it after the gap up, you're definitely not, as an active trader, sitting pretty. If you bought it into this gap and added here and you've been holding it, or if you bought it at the 200-day and said, I'm going to give it to that, you're fine. But actively, very, very random, right? Apple was a little random today. Tesla actually on a short-term basis still looks really good, but it showed you some relative weakness. I tactically made a little bit of money short for those who follow me on the VTF and got away from it, and then kind of gave a doji close. So you take this out of the way now. You look at the price pattern on a macro basis, above the 8, above the 21, still looks really good. Wasn't powerful enough to break out and go. So just a day in the life of Tesla. Facebook also wasn't strong enough to break above 42 and change. But I like the fact that it did an inside day. I like the fact that maybe another day or so and it can go. LinkedIn is probably going to be something that pisses some people off, excuse my French. Closed on the, did I just say that? Closed on the dead highs here, right? Closing the highs almost a pebble throw away from the 52-week highs, and then announced a secondary after the close. So that's going to hurt some guys who took something out that went on the highs and, is down a little bit. At this point, tomorrow we'll see if it's a buying opportunity. I'm sure it will be at some point. There is demand for this. You have 234, and then you also have the 21-day right here. It hasn't touched the 21 days since this spot. Overall, we'll see what happens. Maybe it doesn't even get below this, the 8-day right here. So all in all, this might be a little bit of not a problem, but a little sweat for people who took this out on the highs because it looked pretty good. But again, very random tape, and it's unfortunate sometimes. You look at Netflix, tried to play it for a breakout today. This too kind of looks like Facebook. Wasn't exactly ready to go today, but either was the market. Did close somewhat well, 289, briefly broke above 290.23. Wasn't enough to break out and go. Still holding higher. Hopefully tomorrow, maybe it opens flattish, gets another day, and maybe we catch a nice trade there in Netflix and Facebook. And if you've been holding Netflix during this entire trend, and this is what you do, congratulations. You picked a great stock, and you haven't been worried at all about the taper talk, Syria, this, that, blah, blah, blah. And you still are in the game where the trend that's been really strong, just like some others, have not been broken. Today you saw a bounce up in Google. Question is, was it just a oversold relief rally? Because we know that it did break this trend right here, or maybe even from right there. We know that it had a little bit of an inside range outside day right there, which led to a move lower. So what did it do today? Came in, trapped some shorts who might have went out short, which I think was a tough thing to do at support. Gapped up, traded above this 860, and still looks okay. Some asked me, Red Dog, what does a day one look like? This looks a little bit like a day one. I wouldn't say a blaring day one, but overall, here's your little downtrend. Needs to do some more work before I think it's back on track. It's still, but it has had a healthy correction. Amazon, same thing. Gapped up, was actually a bit stronger. It's been just dribbling lower since that earnings. Remember the earnings came out, looked like a miss, and then squeezed everybody right here. Did a false breakout, came back down, and then it's been dribbling lower. Today, didn't give you any real signs that it was going to happen. Because if you look here close, closed near the lows on Friday like a lot of other things. So today gapped up above this lower pivot, held it pretty well. Actually even tried to test this little pivot. So it's a start to see if it starts acting better. Sometimes these high quality names don't give you that much time, or they don't give you even clues that they're going to go. For this one, I don't think you need to be in a rush, but it did. If you draw your descending channel this way, it is a start. Now it's got to do some sideways work, just say above maybe 286-ish, 287, and then it can continue. Financials tried to hang around. Some doji closes. I would say they held in the best for most of the day. Let's see now if it can go sideways and then build. Bank of America also, which I've been talking about, is kind of the most, the best relative strength there. Still trying. If you look at the chart, still telling you don't have to be in a drastic rush to do anything, but it is developing. And at some point, when the market gets its footing, I think it'll go. Right now, if you're a macro guy, and you're not going to look at your portfolio or make adjustments over the next 6 months, do not sell it, in my opinion. I think at some point next year, in 2014, it's going to be well north of these highs. Could even print a 20 figure, which is a lot higher. I know it's had a really nice move, but I still think you go to your monthly chart on this. It still has a lot of room back to this area for next year. Look where it was. Well, anyway, we'll see what happens. This was one of our picks for this year, and it's been going really well. And you've had some spots to pick and choose your tier size, and lots of times, it's giving you that nice trade. And right now, it's just one of those times where you're trying to figure out if this is another descending channel that'll give us higher prices. Ultimately, this trend has been really strong. Very, you can even draw this one too. Very, very strong, and it looks good still. So with that said, pick and choose. Gold, we talked about selling last week into some resistance, and then today was negative. And if you were shorted, hopefully you covered when it crossed above a prior day high. We talk about that. You had a 3-4 day move to the downside, held the low, traded above the prior day high, engulfed the day, showing pressure to the upside, never even got down to here. So if you got your cute short, hopefully you booked it. And if you're looking to buy a pull-in, this 8-day moving average for gold has been something that's been pretty strong since early August, and hasn't been below the 21-day for more than 2 sessions, almost since the blood on the street lows. So with that said, it still has a nice intermediate trend working. That in silver also. Talked about also the TBTs on how it's at the 50-day. What does this mean? The 21-day was support. If you sold the strength above 81 in the TBTs, you had some opportunity to buy back the 50-day, even though it didn't really give you signs until today. And you look here, look at the chart. Drew this trend this morning. This was one trend that it broke below, but this was really the last breakout where it wound up holding, and now it still looks good. If you got out here when it broke this upper flag, you had the privilege of buying back near the 50-day once it held here on Friday. And then today was, on those headlines, the economic numbers today, they were pretty strong. So with that said, we'll see what happens here. Now you have a trend line you could also trade it against if that's what you do. Or you keep it in the drawer, because I do think that rates higher is something that's going to continue to happen over the course of the next 3, 6, 9, 12 months. And we're going to see some type of 3 handle at some point. So if your entries and exits matter, make sure to look at the chart. If you want to hedge against your bonds or whatever it is you do, we talked about that early in December before 2013 even started, and I still think it's going to persist through 2014. So all in all, first day back, I pretty much sat on my hands the majority of the day, took little trades here and there. I didn't see anything blaring at me. Looks like it was very random as far as if you picked some leadership stocks and bought after the first hour, a lot of them didn't close on the highs, and some did, but you had to really be surgical. If you tried to buy a dip after the first hour, at least you had some spots to use as stops. I know I got stopped out of my spiders. That last hour, you had a little bit of a move off the lows to keep some people guessing, which I guess is good because it's not making people commit too much, because if we closed in the dead lows, I'm sure everyone would be short. So for me, I'm going to be tactical. I'm going to continue to figure it out. Maybe we get another day or so or a few sessions of data and trading to make me figure out if I want to do something for more than a few weeks out or get into some kind of portfolio approach. Right now I'm tactical. Again, the summer wound up being a pleasant surprise with a nice tradable move in July, nice tradable short in August as well. Leadership stocks continuing to lead, and some various moves in spots that made sense according to the chart patterns we've been putting in off the charts and the price point sheet. But today, I'm not sure. We're still above the trend line in the S&P from November. Some signs of weakness. Some leadership stocks okay, some off the highs. Gold still strong. We still have to worry about these headlines, whether today when Boehner came out and said that he supports the president, that's what triggered the sell-off. We have to worry about how sensitive Russia is to all of this, because again, we don't want to be going against Russia in some type of political war or worse than that, obviously, which is everyone's fears. And we also need to know what's going to happen with the jobs data. I particularly would like to continue to see stronger data, which is good for America, which at some point will be good for the stock market. And I think at some point, strong enough data will outpace the decline in the pace of purchase, for QE, which will happen, at the next meeting, which is not until September 18th. So still a lot going on. And you don't need to be a hero. You don't need to overtrade. You don't need to overcommit. Just take your trades, and if trades aren't there, sit on your darn hands, because sometimes overtrading loses your money, and then you have to make it back finally when the setups present themselves. This has been Scott Riley, T3 Live, the recap. See you tomorrow morning at the call. Have a great night.